Today, we are jumping straight into a really puzzling situation, a contradiction, really.
Right. It's all about Rocket Lab, ticker RKLB. If you were watching the market, it just looked like pure panic.
Oh, absolutely. Widespread panic. Shares just plummeted down over 8% in one single session.
Pushing the stock price all the way back down to around the $70 mark. I mean, if you were only watching the ticker, you'd think there was some kind of catastrophe.
A terrible quarterly miss, a launch failure, something. It really did look like a crisis.
Exactly. But our mission today is to unpack this analysis report that argues the complete opposite, that this huge drop wasn't a crisis at all, but maybe a huge buying opportunity.
Yeah, the report claims the market just completely missed a massive piece of news, a financial win that actually made the company fundamentally stronger, even as the stock was collapsing.
So that's the core question we have to answer in this deep dive. How on earth did the company's fundamentals get nearly $1 billion stronger at the exact moment its share price was melting down?
And the signal, the thing this report says the algorithms completely ignored, is a very specific number. $816 million.
And that's the skill we're really exploring for you today. It's about spotting that signal, the real change in value, when all the noise, in this case an 8% stock drop, is just deafening.
It's the ability to tell the difference between temporary market hysteria and, permanent financial strength. And that is such a crucial skill in a sector this dynamic.
Okay, so let's start with the emotion of it all. This wasn't a small dip. The stock crashed over 8.46%. The report says it hit $70.65 specifically.
It did, and the immediate feeling was just fear. People were selling.
But the analysis we're looking at, it provides a totally different explanation. It basically runs counter to that whole fear narrative.
Right. The report argues it wasn't due to any internal failure at the company, not at all. It points to two external things. First, just simple profit-taking after the stock had a really good run.
Okay, so people cashing in their chips, that makes sense.
And that was coupled with these broader, macro fears that were hitting tech stocks all over the place.
So the argument is that investors were reacting more to the general mood of the market, the economy, interest rates, not anything specific to Rocket Lab itself.
Precisely. They characterize the drop as temporary. And if you take a step back, the conclusion they draw is, it's pretty hard to ignore.
What's that?
If all these smart investors liked the company at nearly $80 a share just a few days before, then the current price, sitting right around that $70 mark, suddenly looks like a huge discount on a business that actually just got fundamentally better.
It's a total disconnect. The price is screaming weakness, but the actual corporate news is signaling strength.
Yeah, and it seems to be a classic case of the market focusing on the short term. And just being blind to the long-term picture. The algorithm saw the profit-taking, but they didn't seem to correctly price in the weight of this new contract.
Which brings us right to the centerpiece of this entire analysis.
Let's talk about that contract.
Yeah, let's focus squarely on that nine-figure win. We keep saying the number, $816 million. What exactly is it for, and who is putting up that kind of guaranteed cash?
Okay, so the specifics here are absolutely crucial because they speak to the quality of the revenue. The total value is, like you said, $816 million. And the award comes directly from the Space Development Agency, the SDA.
Which is a division of the U.S. Department of Defense.
Exactly. So this isn't some speculative commercial deal that depends on the market. This is a government contract.
I really want to hone in on that phrase from the report. Confirmed government-backed revenue. I mean, that carries so much weight, especially in a sector that's so capital-intensive.
It's everything. The analysis actually labels this revenue as recession-proof.
Okay, break that down. Why is it recession-proof?
Well, think about it. Government contracts, especially for defense agencies like the SDA, they're funded through long-term federal budgets. They are prioritized spending, so they're insulated from economic downturns or, the normal ups and downs of the commercial market.
So it's like a financial shock absorber for the company.
Yeah.
So when does this revenue actually start to show up on their books?
The report confirms it's scheduled to start flowing in 2026. So the company has this clear line of sight on a massive, high-quality revenue stream that's going to last for years.
And we need to put that number, $816 million, into context. For a company like Rocket Lab, that's a staggering amount of money.
Oh, it completely changes the risk profile. I mean, if you look at the recent annual revenue, this one single contract is a huge multiple of that. The analysis points out that this win alone covers a huge chunk of their operational costs for years to come.
So it de-risks the entire business plan. It basically guarantees the lights stay on and their ambitious projects stay funded no matter what the market does next quarter.
Exactly, and that's the central conflict. While the market was panic selling because of these external fears, the company's actual financial stability was being cemented by nearly $1 billion of secured government cash.
The price just got completely disconnected from the actual value.
Right. So now let's shift from that one contract to the company's overall health.
Yeah, because that $816 million anchor is great, but it's only as valuable as the company's ability to actually execute, right?
Mm-hmm. And the report cites some really impressive metrics here. First, growth is just accelerating. Revenue is up 48% year over year.
48%, okay.
But the number that really jumps out, the one the analysis focuses on, is their gross margins. They are standing at an astonishing 37%.
Okay, wait, let's unpack that. 37%. That sounds really high for a company that physically builds and launches hardware into space.
It is. For traditional aerospace, I mean, getting margins in the high teens is considered a huge win.
So what does that number actually tell us?
Well, gross margin is the profit you have left after you pay for the direct costs of making your product. So, raw materials, labor, production, it's a pure measure of efficiency.
And the analysis calls it software company territory.
Exactly, and that comparison is crucial. Software companies have naturally high margins because there's very little cost for each additional copy sold. Manufacturing, with all its heavy equipment and materials, usually has razor-thin margins.
So achieving 37% must mean they've built an incredibly efficient system. Vertically integrated, maybe?
That's precisely the point. It's what justifies the label the report gives them. Rocket Lab is becoming the Tesla of space.
I like that analogy. It implies that they're not just assembling parts.
Right. They're building the rockets, the satellites, the components, the software that runs it all. They control the entire stack. And that's how they push those costs down and get those margins up.
Which brings it all back to the market's reaction.
Yeah, the analysis poses a really simple question. Given this amazing operational performance and this huge contract win, has the business effectively become 8% worse overnight?
And the answer is clearly no. It was just a market mispricing event.
So we know the financials are strong and the future revenue is basically locked in.
So what about the pros? What does the analysis say about what institutional analysts are thinking? Are they seeing this dip as the gift the report suggests it is?
It definitely looks that way. It suggests the smart money is not buying into the panic at all.
Mm-hmm.
The report specifically calls out top analysts from firms like Needham and Stifel, and they haven't just, maintained their buy ratings.
They've actually raised their price targets.
Exactly. They've stepped in and raised their targets, some as high as $90 a share.
Wow. Okay, that's a huge vote of confidence. When analysts raise targets right after a big price drop, they're basically saying this lower price is a temporary floor. It's a buying opportunity.
For sure. And their long-term conviction isn't just about the current business or even the SDA contract. The report says it is heavily, heavily tied to one major future catalyst.
The neutron rocket.
The neutron rocket.
It's been in the news for a while, but for anyone who doesn't follow aerospace day to day, why is this one rocket so important? Why does it justify such a big leap in valuation?
It really comes down to size and market access. Up to now, Rocket Lab's workhorse has been the Electron rocket. It's brilliant, but it's a small launch vehicle, great for small satellites.
But Neutron is a different beast entirely.
A completely different beast. It's their medium lift vehicle. It's exponentially larger, and it's designed to be fully reusable.
So moving from small lift to medium lift just fundamentally changes the kinds of contracts they can even bid on.
Absolutely. The analysis expects that once Neutron starts flying, which by the way is also slated for 2026, the company's revenue isn't just going to grow, it's going to compound massively.
Because they can now compete for the really big government constellation contracts and major commercial launches that used to be a monopoly for the bigger players.
Neutron basically adds rocket fuel to their growth story.
So to summarize the whole thesis for you listening, the drop to $70 is seen as this weird anomaly, a gift. The $816 million SDA contract provides the safety net, that recession-proof revenue starting in 2026.
And then the Neutron launch in the very same year provides that explosive future growth that justifies those $90 price targets. The report predicts we should see a bounce back above $75 pretty quickly, as the news about this contract really sinks in with the wider market.
This has been a really fascinating look at how one chaotic moment in the market can just completely obscure real fundamental strength. We've pulled out two crucial takeaways for you. First, there's that massive financial cushion from the confirmed $816 million SDA contract. That's clear recession-proof stability.
And second, that surprisingly high operational efficiency, those 37% gross margins, they really change how you should value a company like this. It supports that Tesla of space label.
It's just a textbook example of why you can't rely only on the ticker tape. The market was selling based on this vague, generalized anxiety.
Yeah, while behind the scenes, the company's actual long-term future was being locked down by a 9-figure government commitment.
And I think for you, the listener, you should really consider the unique power of a government contract in a sector this volatile. That guaranteed stability from the SDA acts like this huge invisible floor under the stock price that a lot of people just seem to have missed.
It changes the whole risk calculation. It's no longer, will this company survive a recession? It's now, how quickly can they execute their massive expansion plan?
Which, that leads us perfectly to our final provocative thought for you to chew on. We've talked a lot about these two enormous milestones, both happening in 2026. The revenue from the $816 million contract starts, and the first Neutron rocket launches.
Two huge things happening at once.
Exactly. So the key problem for you to explore is this. How much more operational capacity, how much new infrastructure, and how much short-term spending is required between now and 2026 to successfully deliver on both of those promises simultaneously?
That's a great point. The fundamental strength is there, no doubt. But executing two massive, complex projects, launching a brand new rocket system, and fulfilling a near billion-dollar government contract at the same time, well, that carries its own significant logistical and spending risks. The promise is only as good as their ability to execute.
A crucial thing to watch. That is all the time we have for this deep dive. We hope you feel a little more informed and a lot more curious. We'll catch you on the next one.